So before I move on actually introducing the moderator and the panelists, I wanted to share a quick note on DiligenceVault. If you don't know about us yet, we are a two-sided digital diligence platform that facilitates more effective due diligence and information exchange between investors and asset managers. Like everything we do, today's webinar is meant to be a collaboration between DiligenceVault and our ecosystem and the members of our community. So if you would like to hear more about us, if you want to set up a demo with us, or if you want to get into the mailing list for future webinars, please feel free to email us at ask@diligencevault.com. So let me now move forward and introduce you to our panel and moderators for today. As you can see, the moderator is Joanne Murphy. Thank you, Joe, for assisting us with this. Joanne is the Managing Director of Asia Pacific for CAIA. She has over 23 years experience in APAC. Most of the time she spent in Hong Kong, but she also spent a few precious years here in Singapore, where we are based. She has a strong focus on alternatives, but she really had management position across the industry. So Joanne is going to drive the conversation forward with the panelists. But first, let me introduce you to the rest of the panel as well. Angela Brown is a senior consultant from Towers Watson. She has 18 years of industry experience, of which 10 plus are focused actually on operational due diligence. So she's definitely an expert, and you can ask a relevant question about due diligence, operational due diligence to her. She has experience in various asset classes, including long-only hedge funds, private equities, and infrastructure and real estate as well. Igor, the other panelist, is also a senior consultant, but with Mercer. He has over 13 years of industry experience, and he started his career in Luxembourg, but then he spent significant time in Asia, most of the time in Singapore and Philippines. He is experienced in consulting sovereign wealth funds, family offices, governmental agencies, and also asset managers. And he's also focusing primarily on operational risk management best practice. And then last but not least, Hugo Ney from Alpha FMC is leading the investment practice for Alpha FMC in APAC, and he focuses on anything related to digital and large-scale transformation. His experience basically in OMS and PMS selection and implementation, and is working on projects across the Asia-Pacific region. So without further ado, I would like to actually move forward and introduce Joe, that is going to take the conversation forward and ask some questions to our panelists. Thank you, Joe.
Hey, Julia, that's wonderful. Thank you very much indeed. And indeed, thank you to DiligenceVault for hosting today's webinar. It's great to be here, and to have such wonderful company with Angela, Igor, and Hugo is super. We did a bit of work to prepare for today's session. The topics you see on the slides here is really what we're going to be navigating our conversation and dialogue down. And I think we can all agree that operational due diligence, or ODD, has never really been a hotter topic. If we reflect back on the huge change it undertook, kind of back in the days when industries was too big to fail and Lehman's went over, the whole kind of counterparty risk element of exposure on operational due diligence really came into a very, very tight light. And the evolution of processes and procedures has changed a good deal. I think beyond compare, actually, what the ODD process is like today to what it was a decade back. And I'm sure Angela and Igor have got some strong views on that. I think we've seen much evolution in 2020 as well, given the fact we've had to pivot to a more virtual environment. We're going to get into some of the conversations around that. But I think leaning into perhaps Angela's experience to kick us off, I'd love to get your take, Angela, on where was the ODD landscape on a historic basis? A bit of a history lesson for us. You've traversed this sector for many, many years. Let's not talk about what's ahead or what's happened during COVID, but what was the ODD space like, and what do we kind of do in OpsDD? I've always thought about it as being all the risk for none of the returns when we think about operational due diligence, and it's such a core part of the world. We now see ops teams have veto rights and investments to be made. How things have evolved in the last kind of few years particularly, and what's your take on the history of the ODD landscape, please?
Yeah, thanks, Jo. So definitely would agree with you there. I think as a focus point, ODD really kind of took off after the global financial crisis and after the Bernie Madoff scandal as well. And, you know, I remember back in the days where you go to a conference and there'd be kind of, 10 or 15 ODD professionals, and now you go and there's into the hundreds. So it's definitely has been an area of great evolution. And, ODD in general, one thing that I find really exciting about it is that it is an area that is constantly evolving. There are always new things that we need to be thinking about. There's always new regulations that are coming into play. And, recently we've even seen kind of political events that can really affect asset managers. So within our team, we do spend an awful lot of time thinking about the questions that we're asking, thinking about what else we should be speaking to managers about, and essentially going through a process of, constantly re-underwriting our ODD process to make sure that we are identifying areas of potential operational risk. So that's very much part and parcel of our BAU process. And I think, it's fair to say that that has escalated pretty substantially over the last 7 to 8 months or so. But I think from a process perspective as well, I think by and large, many ODD practitioners, follow a very similar process when it comes to actually conducting an ODD review. So that normally starts with a request and review of information from the manager. That's then followed by an on-site meeting. And then the next process is really to verify as much of that information as possible and really to make assessments and conclusions and decisions based around that information. So that is something that obviously this year has kind of challenged. A key element of most ODD processes are certainly around the on-site visit. So, we as a business took a decision pretty early on that we wanted to still be able to invest on behalf of our clients through this period. And, we also saw a lot of new investment ideas come up as a result of the crisis that we certainly wanted our clients to be able to take advantage of. So, we had to pivot pretty quickly to the new environment, and, that took a lot of kind of brainstorming and discussion about how we continue to do, a thorough ODD process, albeit in a virtual world. So, yeah, I think there has in general been a lot of evolution in ODD, definitely over the last 10 years or so, and definitely evolution coming down the line as well.
Ever changing, right? And I think your two phrases there that really stick with me is, I think when I chat to other friends that are in OpsDD positions or running teams in OpsDD positions, I ask them what they look for when they're hiring somebody, and they say we look for very curious people that want to kind of continue lift the hood up and poke around and see what's going on, and listening to something and actually interpreting it and recognizing that things can be said, but they can be interpreted in many different ways. And I think that constant change, that constant evolution that you highlighted is really, really telling. Now, I appreciate, Igor, that your role there at Mercer's is a little bit different insofar as how you service clients and work with clients. So again, looking back from a historic perspective, mindful we're going to be addressing a look ahead later in our conversation. What are your perspectives that might kind of look at Angela's comments from a different standpoint? What's your thoughts on the history of the whole ODD landscape?
I think Angela highlighted some really good points. How ODD was traditionally you do a pre-review of documents, arranging an on-site meeting with different parties, and then do a follow-up, and then it resulted eventually into a report which is used by the client. overall, in my view, the ODD process has evolved, but more from the scope and the questions we ask. I wouldn't say in particular in the process. The process was over the last few years always the same. We always send out emails, we ask for documents, we request review the documents and do the on-site visits. I think that remained kind of static over the years, didn't really change. It's just what really involved was the scope, over the years, which the focus was more on cybersecurity. Clients asked more about the trading and best execution, because it was also in the focus of the regulators. So then there was an involvement, and I think, as also Angela highlighted, the profession has taken on more staff members across the globe, more interest because of the incidents happened in the past and with Madoff, etc. That's involving, but I think overall the process has been stagnant in my view, but now coming forward with the COVID situation, there has been new developments, and which we probably discuss later, which really drove the ODD profession to the next level, I would say.
No, I couldn't agree with you more, Igor. I think that the last 6 months particularly has changed. And I think one of Angela's observations before, you'd go to a conference a few years back, and there was a very small number of professionals that would put their hand up and say, I run an ODD team, or I'm really there to kind of protect the investor from an operational robustness perspective. When we think about ODD, it's all the cash is coming in, it's being assessed and looked at and viewed. So again, all the risks that's there when we think about investor protection. And it's really the investors that you're there to protect and provide those solutions and accessibility to. And I think accessibility is something which leans into all things relating to kind of technology. And I'm going to bring Hugo into our conversation here because, there's been a good deal more change that we've seen on the tech side has played a significant role in how operational due diligence can be conducted. There's some short areas you can basically fast track DDQs and analysis, whether you're using a standard template. I think some of that kind of quantitative stuff you can amalgamate and use technology to help with. But from a discipline of kind of tech, Hugo, where have you seen disruption most in the tech space historically? And what are you seeing happening on the whole kind of tech landscape at the moment?
Thank you, Joe. Yeah, that's a very good point. And disruption has really come in the industry recently with all these startups and fintechs, which basically have, I would say, plugged in to the asset management ecosystem. Historically, the asset management and the investment management ecosystem was quite closed and was quite, I would say, relying on a complex technology stack, and which were quite closed. And very recently, in the past few years, we've really seen an evolution of many disruptors and all these fintech companies really plugging into the ecosystem. So that's, I think, the main evolution that we've seen in the asset management recently is really how the ecosystem has opened. This is, I think, disruptive innovation is one type of innovation we've seen with asset manager. You have two other types with asset manager. You have the radical innovation, which is really technology and exploring new technologies, etc. This is actually pretty limited with asset managers. They don't really have budget. They don't have the innovation labs. They don't have the right profiles compared to the GAFA and all these big companies. We don't really see this in the asset management industry. So we have some, we're discussing about some new technologies like blockchain, etc., but it's still pretty limited and still at the exploration phase, and the budget allocated to this are pretty limited. We're also talking about incremental innovation, and this is more the day-to-day innovation. This is what we call the continuous improvement. and this is how we basically, asset managers, are upgrading their existing technology stack, how they drive change management within their organization. This is very well in place with asset managers. This is something that is planned in advance. You have 2, 3, 4, 5-year strategic plan to upgrade your technology stack. And this is something, incremental innovation is something that has been in place for quite some long. And what I was mentioning at the beginning, this disruptive innovation, and really is quite recent, and the way this open ecosystem has emerged is really an important factor for asset managers. You can see it in the investment world now. Fund asset managers proposing funds from other companies, and this open architecture for investment. But you can also see this along the value chain with asset management companies really partnering with lots of fintech companies in the due diligence space, like potentially DiligenceVault, but in multiple other areas of the business, in operations, distributions, etc.
And Hugo, I mean, many questions. I love that visual of the disruptive, the incremental, the radical innovation, and the fact that you just dismiss radical innovation as being something we would never look at in the financial services world. Is that because we follow a premeditated route? We think about the sheer changes to change a system in a bank, for example, you know, kind of ripping out one main artery and trying to throw something else into the ecosystem of an organization. That takes many years of planning, and then obviously the cost of those things as well. So is there ever going to be radical disruption in this sector? Is it blockchain? What is that radical lever in your mindset for that coming up down the pipe?
Yeah, it's already coming, but it's coming in waves. And radical innovation, we had some radical innovation in the past decade, I think, was the cloud and the adoption of cloud technologies. And now we see that 10 years ago, it was really a radical innovation. Now we see that all asset managers start to have a cloud strategy and a cloud well implemented. Blockchain now is also one type of radical innovation. We see some use cases already implemented, especially in the distribution, around transfer agents, etc. So we've seen some implementation cases, but it will. And I think we'll see. I think it may be implemented in the next decade. And again, it comes with waves. The next one may be all related to tokenization, to crypto assets, etc. But again, very early stage at the moment. Need to plan way in advance for all these radical changes. And we may see this coming, but it will take times and not months, but I think years to come.
Yeah, well, I like that term here, the wave of change that's occurred on the tech side, and looking at the impact of COVID on the ops side. I'm kind of imagining it's been a bit of a tsunami of change that's really happened when we think about the implementation of operational due diligence and just what has COVID done from an operations perspective. And, you know, whether I talk to friends in various parts of the world where they've gone to the office, they've ripped out their desks and kind of taken their screens home. And, you know, we've moved to things to the cloud, which might have been done in the office historically. I would imagine that nimbleness and that curiosity I touched on before for Andrew and Igor. What has happened in the COVID months of this year thus far to all things Ops DD? You know, I'd love your take and experiences of lessons learned, and what have you had to do to kind of make sure your operational assessments are up to speed with what the world's changing in such a fast pace. Maybe Igor, you'd like to kind of have a try at that one first. Sorry, Igor, you're muted. Just if Igor, you're muted. Sorry.
Thanks. Sorry. Thank you, Joe.
No worries.
Yeah, actually, the crisis brought disruption, if you use the word what Hugo mentioned before, to our business as well, from different aspects, the way our processes is conducted, the way we use technology. And I think if we go back to the traditional ODD process where on-site visits were given, and a requirement. And why did we do on-site visits? It's really to understand how the manager operates, to get a feeling about their office environment, how they cooperate together, or even review confidential information, because those cannot be shared through email or any platforms for different reasons. So I think this kind of situation has now changed, and now with COVID, where most of organizations activated the business plans, we and our investors as well have to make a decision. So what we're going to do, right? Because it impacts our ODD process significantly because of those challenges we have. So and then what we saw is, of course, the new norm, we call it a virtual on-site visits, right? And this is something we had to explain clients. How do we obtain all this kind of comfort, seeing confidential information, getting a feeling about the manager, assessing their knowledge virtually? Is that acceptable? And I think from certain clients, we're very skeptical about that, I have to say that. So they, for example, say, okay, we delay the onboarding of new managers, or we only invest with managers who we already know. Because our policies, when it comes to ODD and approval of managers, require on-site visits, right? So there was those kind of challenges we had to discuss and to overcome. We saw clients adapting their policies, allowing remote, ODDs or virtual ODDs. So it really helped to accelerate it. But I think overall, with the virtual meetings, which we proposed to the clients, and of course educated them, that it gives us a lot of advantages as well. And what are disadvantages to our clients as well to us? It gives us more time with the manager. It sounds maybe very funny, but if the managers are in their home environment, they don't have to travel somewhere. We don't have to travel. We can spend those time more efficient interviewing the managers, assessing their knowledge, having a more in-depth discussions. And as well, the interesting results of all this kind of developments is so managers became more transparent, because they want also to make sure that the client are comfortable, the virtual ODDs are acceptable. So they share more documents, give more insight, or use online platforms to share the documents. Or even we had recently a case that do a virtual office tour through the office, share their office plan and our sitting arrangements, and do online system demonstration. So actually that's a kind of great benefits for us as an ODD profession, which helps as well with accelerating the process, and eventually also resulted in some cost benefits for clients, because we don't need to travel, we save time. So it's a mutual beneficial arrangements. But of course, there are certain challenges as well, which we have to consider, because it's for us also to learn to understand how managers work remotely from home. We're not used to that. Our generation is slowly getting used to it, but it's not a common theme in the past, particularly I would say in Asia, maybe less than maybe in other jurisdictions.
Yeah, just the acceleration of change that we've seen and the adoption of that change this year has been breathtaking, right? And I hear you on the cost benefit thing, but maybe I'm still a little bit old school, that whole touchy-feely thing. I still feel that there's that need to look a person in the eye, and there's something visceral you get from that gut instinct. You shake a person's hand, and I don't know, I think the resolution that we're actually operating on today, microfacial movements aren't able to be mapped yet by technology. So there's something when you're sitting in a room, you've got 2 or 3 people side by side, you can feel something about how they're actually interacting with each other. So I think that's kind of missed. And Angela, from your perspective, I loved your observation when you were talking about the history, and you touched on a point where you said that there were investment opportunities you didn't want your investors, your clients, to miss out on, so you had to adopt. And I respect that statement massively, because it's exactly that. I think at the beginning of all of this, the existing pots that people could put their cash into was adequate. But as this continues on, we've got to find new opportunities and new investment targets to put that capital to work in. So I know Igor shared some points that he has touched on from his perspective at Mercer's. What have you seen from your COVID kind of changes there at Willis Towers Watson? What have you had to adopt and adapt? And moreover, what surprised you? What doesn't work in the remote space from an ops standpoint? What are lots of questions there, but I know you're going to elegantly take them all up and give us a beautiful answer. What you do best.
I'm going to try, let's put it that way. But yeah, I mean, to Igor's point as well, you know, we, as I mentioned, we've also had to move into the virtual world, and you know, as I mentioned again, you know, we did think long and hard about how to do that. You know, there's one thing having a virtual meeting, but you know, I always say our ODD process begins as soon as we're walking towards a manager's building, because that's when we're assessing things like what security measures they have, you know, how is access restricted, do they have security staff on site, do they have CCTV cameras, etc. So, you know, there are definitely elements that you can't necessarily pick up. And, you know, you also alluded to the fact that it's very hard to read body language during a video conference, which I would definitely agree with. But yeah, because of that, you know, we've had to be more descriptive in some of the questions that we're asking managers as well. So we're really asking them to describe their building security and that sort of thing. So we've definitely got more descriptive in terms of what we're asking and addressing. You know, we are also managing to do things like virtual office tours, which are actually quite successful. You know, throughout the crisis, people have had some people in the office on occasion, whether it be their traders or, you know, somebody from IT checking on servers or somebody in facilities picking up mail. So we've been trying to take advantage of those types of situations to be able to do more than we would in normal circumstances if it was just, you know, one meeting with somebody and everybody's virtual. So we have been doing that. We've also been thinking about things like expanding the reference checks that we are doing. So, you know, if we haven't been to somebody's office and we can't do a virtual tour, we have been thinking about maybe touching base with other investors that, you know, maybe did their review prior to COVID, and we can have a chat about their observations as well. As part of our normal process, you know, we do reference checks with the independent directors on fund boards, and you know that historically has been very focused on their role as a director and all the things that they do as part of that. But, you know, assuming that they've been a director on a fund for some time, they have probably met the manager in person as well, in their office. So that's another kind of lever we can pull as well to just try gain as much information as we can. And, you know, in terms of our decision to continue investing, you know, at the start of this, everyone was kind of taking bets on how long it would last. And, you know, a lot of people were thinking, hey, by June, we're going to be fine and we're going to be back in the office. Then it became September and, you know, then it was December. And in many jurisdictions across the globe, that's getting further and further pushed out. So given the time that this, or the length of this crisis, we still have to kind of continue to operate. But in terms of the managers, you know, in our experience, and I will caveat that, you know, we cover a very small universe based on kind of the whole industry. But we have been quite surprised and pleasantly surprised in how firms have been able to continue operating. So we haven't ourselves come across any instances where firms have had such material issues that they have not been able to continue doing what they do. So that's obviously a really great thing from our perspective. But, you know, we did see issues. There were some property funds that suspended activities, mostly driven by issues around valuation uncertainty. You know, we did see some of the fixed income funds have their buy-sell spreads widen quite dramatically. And, you know, that there were certainly challenges and we would expect challenges. This has been a very big change for a lot of managers. So, you know, there's been kind of an increase in things like cyber attack attempts. So, and even some successful cyber attacks as well. There's issues cropping up around cash movements and needing kind of wet signatories for things, whether it be, to open accounts or to sign legal documents or something like that. So there's definitely been challenges, and I suspect there will be further challenges. But yeah, I think most people are coping reasonably well, and pleasingly, people are being quite open and transparent. And that's great from our perspective. If we have that information across a variety of managers, we can also help in terms of providing suggestions and stuff like that.
No, and I mean that's again, I appreciate just the sheer variety of your replies to the variety of my questions. So fair play and good job to pull that all together. One thing I'd like your steer on, and Igor or Angela, obviously businesses have these big BCP documents in place that they can kind of pull out of the filing cabinet and trigger. And as you say, the world all kind of pivoted to this change at the same time. But I'm certainly seeing and hearing when I chat to investors and just chatting to industry, that BCP plans have had to be rethought and reassessed. And suddenly it's okay, well, we hadn't thought the trader will be working from home, and we've got to think about who actually hears that the trade conversations that are going on, who's living with that person. So to your point before about expanding those reference checks, what are some of the questions that expansion has required you to kind of pop into the operational due diligence perspective? And then just a second reflection, that I love that sharing society is being leaned into. So who knows this fund from before? Who knows this manager from before? So it's not just kind of having a conversation about the individuals within that organization to get that more kind of quantitative checking. You're almost going out to friends and family and connections of businesses for the more qualitative side of things, which I don't think we would have perceived would have actually happened 6 or so months ago. So I don't know, BCP and reference checks, and what are we going to see there? What's kind of happened there as well?
Yeah, so I'm happy to take that. So completely accurate on the BCP side, especially for the larger firms. A lot of their kind of BCP planning was around being able to move their operations to another location, because no one kind of expected everyone to not be working from home. So, that was a lot of the essence of a BCP, is kind of follow the sun, move the book to another jurisdiction that hasn't been impacted. And, COVID's really tested that, given, globally firms are now almost 100% working from home, and, conscious that in Asia, that's kind of, things are returning a bit more to normal. So that has been a big challenge. And, even with regards to BCP testing, normally what happens is there's a subset of individuals that kind of, test that they can access the systems and test that they can log on remotely and that sort of thing. But if you have a firm with thousands and thousands of people, you probably haven't tested the fact that everyone has to log in at the same time. So, we were speaking quite closely to managers during that period to see, where they were in their evolution. Were people working from home? Did they have split team operations? Or was everyone working remotely? And really drilling down into any issues that were coming up. So, whether people could access the systems, did everyone have remote access? Did they have to extend their bandwidth? Did systems slow down and stuff like that, just given everyone working remotely? So I think there's challenges there, definitely. And I think with the pandemic as well, there's obviously staff well-being to think about as well. So, we saw a lot of people having to think about things like cross-contamination risks. So starting to split teams so that if somebody was ill, it wouldn't kind of have repercussions across everyone in the firm. So yeah, I think there's been a lot of challenges and a lot of people rethinking things. A lot of people as well have dedicated kind of BCP sites that had played quite a big part in their disaster recovery plans, but when you can't travel anywhere,
redundant
those are kind of sitting
right?
Exactly. Those are also sitting empty.
Very much. Exactly, and I'm smiling because that's exactly it. So none of us could have predicted this kind of thing kind of occurring and so forth. But I think that system testing, actually, when you've got 2 or 3 people from home testing a system, everything works beautifully. You have hundreds of staff or thousands of staff, that whole thing kind of goes down. In fact, we got bit at CAIA with Zoom. We were hosting a webinar for our Indian community a month or so back, and it happened to be launched at the exact same moment that all the kids in the US were going to start Zooming online for their school education, and the whole system went down. So you can't always work that out, right, what's going to actually happen. And Hugo, it's a lovely pivot to bring you in. So tech, I mean, it's played a massive part of the development of what's actually happened from a due diligence perspective, and obviously helped and hindered, I'm sure, in certain aspects, because again, companies have a very long implementation process of tech. What surprised you from a tech standpoint that's what's actually happened during COVID? What's your observations here?
What we've seen in companies and investment firms who've been very successful were companies who had kind of this 80-20 rule, 80% of their enterprise having a very robust enterprise infrastructure, very robust and really full coverage with core applications very well established, and 20% having, as you mentioned, this kind of tech layout, working with agile fintech companies who can be more flexible, etc. So I think both components were very important during the crisis. The core infrastructure to enable you to monitor your risk on an enterprise-wide view, to take investment decisions, etc. And also, I would say the 20% layout, which is all the flexible workflow tools, the video conf call application, remote access systems, all the cloud servers also, and well-established cloud servers really helped these asset management companies navigate through the COVID. So I think it's really a mix of really well-established core infrastructure and flexible tools which you can deploy. I would say in a flexible and agile manner and quick reactivity during the crisis.
Yeah, agility, right? In any part of our life, professional or personal, it's always about being agile. So we've got agile and curiosity. There are kind of two phrases that stick to mind from this conversation. Now, I always enjoy panel discussions, particularly with the experiences that we have here. So from your own, Angela, Igor, and Hugo's. I've always asked a question about the kind of bit of a crystal ball gaze, what's likely to be happening as we kind of move down the path. And we've had the whole scene set for what happened post Lehman and Madoff, and just the fact that ODD was 2 guys in a Bloomberg in a shed somewhere, particularly on the hedge fund side. But I also think that a lot of the operational due diligence protocols fell out of the hedge funds industry. You chat to private equity groups or venture capital groups, they've actually adopted the DDQs that we use for hedge fund operational due diligence. It's been amazing how those two things, private markets and hedge funds particularly, are coming together to share and to look at lessons learned. But I do want to ask each of you for your view on what's ahead. So I've heard some great points that you've each shared during your thoughts and comments, but what's next? I mean, again, that curiosity, again, Angela's earlier point that it's one part of the industry where things are changing every day. It's where I said all the risk sits. It's where all the risk sits from an investment perspective. It's only as kind of robust as the last kind of link in that chain. But what's next? Who's going to be willing to put their hand up and make a bold call on what's ahead for operational due diligence?
Maybe I can go ahead first.
Okay.
So in terms, what's next, in my view, is virtual due diligence, or the way we run our process, will not go away. I think that will be part of the process. It's just, I think particularly in Asia, where we have a lot of emerging managers, which are not well known probably, a face-to-face meeting will be probably still required once we overcome the COVID-19 situation and travel bans are released. For example, we can see right now between Hong Kong and Singapore, there are opportunities to travel if it's for work. So I think it will not go away, because certain managers are not well known in the market and still need a face-to-face meeting, and we need to understand the system and and meet the people in person. As you say, you need this kind of human touch feeling to have an understanding. And I think for bigger managers, this situation will be more beneficial, like the larger ones, the Schroders, the Wellington of this world. They might benefit from this change of virtual ODDs because they're well known in the market. The process can be more efficient, can be done virtually. You don't need to fly all the way to the office to London or to the headquarters in the US. So it will give the opportunities, but also it will reshape the process the way we run it. And I think it will be more like a hybrid model or a risk-based approach. You need to determine where you have to go for on-site visit and where you can do a virtual meeting. So that will be, in my view, that will be probably the norm moving forward.
Well, Igor, forgive me, but I'm really disappointed to hear that, because if anything, I think the fact that our industry is already, particularly in the alternative world, is already quite so bifurcated. So the fact that bigger get bigger and bigger and the smaller managers, there's so many barriers to entry already. So it's really not heartening to hear the fact that this virtual world is going to lean in more unfavorably on those emerging managers because they're smaller, and as you say, that kind of getting to know those more softer sides of those organizations is going to be more challenging. So I think I get criticized for saying three things. I talk about institutionalization, I talk about bifurcation, I talk about democratization, and unfortunately all three of those points are not actually too positive from an ops DDQ perspective, which is worrying. Angela, would you agree with that, or do you think there's a bit of a rosier picture that the smaller managers might kind of come out a little bit less covered in kind of hair?
Yeah, so, if only we had a crystal ball, I would know how things work out.
Humor me.
But yeah, I do agree. I think it will probably end up more of a hybrid situation in terms of on-sites and virtual. I definitely think from our perspective, we do favor the on-site. So I suspect that will definitely happen, and it will be across managers and all shapes and sizes. But I think there is certainly a question, do you have to fly across the world every year to see the same manager that you've seen 5 years in a row? Maybe not. And, that extends to kind of client meetings and presentations and all that sort of thing. Like, I think there will be some benefits to being on site, and I don't think that's going to go away in a hurry. But, there is a lot of advantages to the virtual side of things as well. And I would add as well, sustainability is a very big topic within our industry at the moment. And I think a lot of firms are also looking at what they can do from that perspective. And, cutting carbon emissions might be something that's worth considering as well.
Yeah, and to that particular point, Angela, I mean, look at the adoption of ESG in 2020. It's been phenomenal. I was on a conversation with some of the insurance sector just about this the other day, and we've gone from maybe like 10% or so of the world saying this is important to more than 80 in such a short period of time. And you're right, the whole environmental impact of business practices is really being put under the lens at the moment. So I think as organizations more openly adopt, address, evaluate their ESG. You spoke about some of the well-being of professionals that work for organizations before, more on the social side of things. But I think you're right, the sustainability aspect can be thought about more fully in the fullness of time. And Hugo, what about you? What's your kind of thoughts and predictions complementing Igor's points and Angela's points along with my own?
Yeah, we are mentioning maybe this benefiting to the biggest companies, and I think what's next, maybe a lot of M&A opportunities, pressure on cost for the smaller asset managers, and in the same time, this need to accelerate the digital readiness. So pressure on cost, need to invest to transform your business and to adapt your business. So some smaller managers will struggle, and there will I think be some acquisition opportunities and some to create bigger groups and able to scale in a better way. But yeah, I think that the digital readiness is a big one also in the agenda, not only from an infrastructure perspective, develop really this an agile remote working infrastructure will be a key element, but also from a digital culture. I think that's what we've heard also and what we've discovered during this crisis. Managers need also to adapt their management skills to this new normal and to get closer to their staff, and need to also train their staff to this new normal and to operate in a remote working environment. So this really embeds this kind of remote work culture will be an important part in the future. A couple of things before, and I think Angela mentioned about cybersecurity threat, etc. There will be also a challenge in this new remote working world is really to monitor your risk, regulatory and compliance issues. Because when you work remotely, of course, there are a lot of more risks in terms of compliance. We've seen in the industry some NAV calculation disruptions. We've seen some cyber attacks when you try to connect to your core systems remotely. With a lot of aspects around data protection, IT security, these companies will have to think longer term how really to build a secure and environment for working remotely. And finally, I think what I've seen also, what we've seen during this episode is really the need to streamline your operations. We've discussed some challenges around face-to-face meetings, etc. But also we've seen typically for asset managers who outsource part of their services, some challenges and the need maybe to review SLAs with their providers, maybe improve also their oversight functions and have more regular and more defined, better defined oversight with their providers. So really the need to streamline their operations. So a lot of things actually, a lot of adaptation and transformation needed to be able to operate normally in this new environment.
Yeah, and I think a lot of those points you make there, Hugo, have been echoed during our conversation here, and it really goes back to that original point that operational due diligence, it's always evolving. It has to transform because as new things come on, as new investments are being identified, as new areas are being orientated, basically we have to kind of create the look through to assess the impact of that to the actual operation of that organization. So it's great that the investment side of the business wants to continue its nimbleness and so forth. We can put processes around that, but just how the overall structure of an organization evolves, it transforms through time. That just makes your job on the ops side even more challenging, but I'm sure also more interesting, as you're therefore ripping those different things apart and understand the impact of those risks from those operational changes. Now, I'm mindful that we need to pass across to Julia to address the questions from our audience today, but before we go, a bit of a quick fire round. So in kind of 30 seconds or less, when you're in the weeds of operational due diligence for a manager, where do those red flags most surprise you? You know, what is it that kind of makes you stop, and where do you kind of typically find the red flags when you're looking at an ops DDQ of a manager?
I think that's $1 million question, and risks can certainly come from all manner of areas. And, you know, to the point of this conversation as well, there's lots of new risk areas coming up. You know, we haven't really touched on staff well-being, but there's been a lot of focus on things like mental health. And we've been asking a lot of questions around, you know, how people continue to motivate their staff and how do they make sure that they're communicating with staff and making everyone feel included and knowing what's going on in the current environment. So, yeah, it's a bit of a tricky question to answer it with one particular example, but I think, you know, what I would say is we really need to think out of the box at the moment and think more broadly than what we would normally think, and, you know, adjust how we think about BCP, how we think about compliance, and what challenges compliance teams have at the moment. That's pretty phenomenal as well.
Yeah.
So yeah,
the personal trading and who you're living with and how the information is being shared. But I like the fact that that red flag for you really is in the current state, Angela. It's how is the organisation looking at the well-being of their staff? And would that have been a question on an Ops DD historically? Maybe not as directly around that, but I'm guessing that we're going to see a new evolution of questions where we actually ask the organisation, how are you motivating your team? How do you keep a team and the overall culture of a team? How is that therefore, how does that manifest itself remotely? And there's some amazing things that we're going to see evolve there. So I like the new area where the red flag for you is. That's a really great point, Angela. Thank you. Igor or Hugo, anything to add on those red flags or any thoughts?
Yeah, maybe I can pick up the red flag point also a bit in relation to one you mentioned before, that there's a disadvantage. You felt that there's a disadvantage for a smaller manager when it comes to the new process of virtual. In fact, in my view, operational diligence in our profession is involving becoming a more, or will be involving becoming a more true consulting engagement, where we are, even when we identify red flags when we're reviewing manager, it doesn't mean we are not going to go ahead with them. Actually, we help the investor to understand the risk and to facilitate the process, how this risk can be addressed together with the manager. You know, this is a three-party relationship in my view, where we can work together to put proper controls and advice on best practice, how to address the risk. So then even the client like this manager, he can go ahead because he knows the manager is putting in place the proper processes, policies and controls. So, and where I think when I mentioned that those smaller managers have the face-to-face meeting, it's actually beneficial for them because we come down to their office and we have to have like a consulting project with them, right? We tell them, okay, this is the best practice, that's your peers. With the bigger managers, they're probably not as keen to have this kind of interaction at a certain point, because for them, the ODD is more like a standard process. They just want to get it done, right? So I think there will be benefits for smaller managers in the process, even because we can go down to the office, have to face-to-face meeting, and because also the ODD profession will involve in a more consulting approach instead of doing just a tick-the-box exercise.
No, valid point. And there's the simple fact that those proper controls need to be put into place. I understand and hear you on that, Igor. Thank you. And Hugo, finish us off before we pass across to Julia. And I know there's been questions coming through as we've been speaking. So good points shared by Angela and Igor. Any final thoughts from your side, Hugo, please?
No, I think just to keep in mind that I believe all this will be very different across regions. First, in the short term, depending on how COVID evolves, I think the way each region will adapt is adapting at a different pace, etc. And I think in the future also will be interesting to see how organizations carry over the lessons learned from COVID and how they basically maintain it in the various regions and in their organizations. This long-term adoption will be different, I think, in different regions. And from cultural point of view, we know that some regions are more inclined to face-to-face meetings, and it's embedded in the culture. And I think even if they adjust temporarily during COVID, I'm not sure it will become a new norm in the future, and maybe we'll be back to what we've seen in the past. I'm thinking here in the Middle East, for example. I know that face-to-face meetings are way more established, etc., and potentially in other regions. So just interesting to see how things will evolve and will actually be carried over.
Great, Hugo, thank you. And again, thanks to DiligenceVault for bringing this conversation together today. It's been great to have the chance to hear Angela, Igor and Hugo's points of opinion on the big topic of operational due diligence. So thank you for that. So I'm going to pass the mic across now to Julia, who's going to guide us through the final minutes to address some of those questions which have been kind of popping through as we've been speaking. So again, thank you everybody, and Julia, over to you, please.
Thank you, Jo, and thank you to all the panelists. Yeah, we have a few questions. Actually, the first one is related to what Hugo was just commenting on. And Joe, I would like to include you in this question as well. All of you are a part of global organization. Have diligence practice evolved differently across different regions given the different COVID outcomes? What do you think? What's your experience like?
I can quickly jump on this one, and from a consulting experience, we have offices in Australia, here in Singapore, in Europe, and the way we've basically adjusted to the crisis has been very different. Angela can confirm, but my view is that, and what I've experienced is that in Australia, people were returning to office way more quickly than here in Singapore, for instance. And maybe less inclined of this remote work environment. So yes, there's been differences, and I think there's been differences in the impact of the crisis in different countries, and countries have reacted differently. So I'm not sure, Angela, how is it for you? But what I've seen is that most operations team in Australia are in office, maybe in a split mode, but still there's an appetite to go back to the office, and maybe a little less strict than what we have here in Singapore or what we've seen in Hong Kong, for example.
Yeah, absolutely. That's definitely what is happening here. You know, and it depends, I must caveat, where you are in Australia. So, you know, Melbourne is still going through a lockdown period. But definitely in Sydney, at least, people are returning to the office. Quite slowly. You know, some people have capacity limits in place on their offices. Some people are opting to continue working from home for convenience reasons or health concerns, public transport concerns. And yeah, some firms are still kind of operating a split team approach. But as yet, you know, most people are still a little bit skeptical about having people come on site into their office. So we are still seeing most of the meetings are taking place virtually still. And yeah, I guess it's a matter of time until people become a bit more comfortable.
I'll just make one kind of funny quip, if I may. I think that I've just been surprised by no one uses the telephone anymore. Every call that I seem to have these days, it has to be a video call. So I'm not sure how that happens. So we've gone from the fact that a person would phone you and you'd actually have you'd literally have a voice exchange, and suddenly everything, let's have a Zoom call. Why? I mean, it's just amazing how that's happened, right? So just a quick anecdote.
I have to agree. So I work for a global team, and we have team meetings at 6 o'clock in the morning for me, or 11 o'clock at night, and there I am in my dressing gown thinking, does this really have to be a video call? So I definitely understand that element.
Yeah, completely.
Thank you for sharing. I wanted to move on the second question, which is actually related to new investments and virtual on-site meetings. So have you seen basically new investment coming through virtual on-site meetings, and do you see any correlation to the commitment side?
I mean, just from I'm product agnostic, so I don't raise funds or deploy funds anymore. But absolutely, again, to that point, I think I shared before, we've had investors that wanted to just top up on funds that they are happy to have topped up with, they're invested already. But now we're seeing much more cash being deployed into other new investment targets, and that's been done in the most part remotely, or a third-party consultant has been hired in that jurisdiction to help with that final hurdle that the actual investment group might have had to get that investment target across before they can write the check. So I certainly have seen some changes there, just from an observation perspective.
Yeah,
maybe
I add on to Joe's points. It depends. If you would have asked me the questions 3 months or 6 months ago, that answer would be totally different to now, because everybody thought COVID will be there for 3-4 months. Okay, we hold back investments. But now the appetite is increasing for different reasons, right? US elections are coming up. clients are still looking for the volatility in the market and want to go ahead with certain investments. So I think now we see in Mercer still managers selected for new investments, irrespective of the commitment on the private side, on the hedge fund side. It's just we have to provide to the clients a certain comfort over our virtual process and what additional reference checks we perform, additional procedures to cover certain risk aspects.
Thanks for sharing it, Igor. Actually, I'm conscious about time, but I wanted to ask one last question, combining the two questions that we got, which are related to cyber risk. I know that we touch on quite a bit on this, but do you feel that the ODD framework actually changed and adapted to the new heightened cyber risk? And do you see any changes in the risk for appetite or aversion, if you wish, to cyber risk?
I can take this first. So actually, I mean, I can only speak from our perspective. Cyber risk was always evolving over the last few years, also driven by regulations and regulators. For example, MAS has just recently issued the cyber hygiene guideline. So I think cyber has been always a hot topic. It was maybe COVID just emphasized the question, more focus on it by investors. But for ODD professions, I would say it was always an area of a focus. It was not particularly required more attention from us. We will still ask questions around penetration testing, cybersecurity measurements, and as well what are the BCP planning as well in respect to cybersecurity. So I think there was always areas of focus where we still find some findings and key risks which needs to be addressed.
And if I can just add, so please go on, Angela.
Yeah, I was just going to agree with what Igor said as well. But given the increase in attempts at the moment, we are focusing more on understanding what managers are doing to kind of raise employee awareness. So we've seen a lot of kind of cyber campaigns going out to employees just to make them really alert to the risks. We've also seen some kind of changes to cash controls as well to, introduce more steps to verify banking details and to make sure instructions are actually valid. So it's kind of building on it, essentially.
And just to conclude on the if it slows down, if it can slow down the adoption of cloud, I don't think so. Most asset managers choose for a well-known cloud such as Azure, AWS, and usually their security policies and security around the cloud is even more important than what you have if you have your server on premise or if you develop it internally. So I don't think there's a direct impact and it will slow down the adoption of cloud.
Thanks for sharing. Great. So this is a wrap. I want to thank you all, thank our panelists, Angela, Igor, Hugo, and Joanne. They did a great job moderating, and for all of you to share your experience and views. I just wanted to remind you that we are very open to feedback. We are looking forward to hear from you. And if you have any suggestion regarding future content for DiligenceVault webinar, please get in touch. In the next few days, you will also receive a follow-up email with key takeaways from the discussion. And yeah, that's it. Thank you so much for joining the discussion. And we are looking forward to see you at the next webinar, which is going to be focusing on private market diligence in a few weeks. Thank you so much.
Great. Thanks very much indeed.